But the thing is, we don't see a de-escalation there. So if those are one of the primary factors that move gold higher and they're still in play, I would expect that to create bullish undertones. The next thing is inflation. Inflation has been coming down. And as it comes down, there's a standard correlation. Higher inflation leads to higher gold and the reverse. But what's going on now is central bank interest rate normalization, because gold doesn't yield as an asset, it doesn't yield any percentage of return. As interest rates move down, it makes bonds, securities, and things like that less attractive because the yields are going down. So I expect the Fed to do a 0.25% rate cut this year or in December. That would be a total of 1%. Their goal is to take current Fed funds rates to 3.5%. And I believe they'll get there by, could be the second quarter of next year down to the third quarter. Lower interest rates are going to be a bullish undertone for gold. And so the bottom line is, the last thing is Trump. We know what happened last time he was a president, and we know what he's on record saying. He seems to be pretty true to his word, maybe not to the statements he makes sometimes, but if he says he's going to do something, typically we've seen him actually do that. And he's committed to tariffs, not only in Canada and Mexico, which is a new one, but to increase the tariffs in China. Now, what does that mean? If tariffs are 25% and I'm buying a toothbrush from China that's $1, I now pay $1.25. If that isn't the definition of inflation, I don't know what is. Tariffs will create tremendous amount of inflation. He also created more debt for the country. He's not alone in that by any means. That kind of seems to be the standard practice of almost every president that, since I've been around and alive and followed, debt has been accumulating. And so what that does is it plays against the currencies, and the dollar in particular is sensitive to what we do, but the euro is sensitive to the European countries in the Eurozone. So when we see the fluctuation in the dollar and we look at a dollar chart, we're looking at the resilience that you're looking at is in the relationship to other currencies. The dollar this year bought much less than last year, and last year bought much less than the year before. In other words, the value of the dollar, when we look at these charts, we're just comparing them to other currencies. We're not comparing them to the buying power of the dollar. And so it becomes a little misleading when we go, the dollar is strong. Well, yeah, it's strong against the euro, and that's important if I'm going to travel overseas and I've got to buy stuff in euros or whatever country I go to. But when we look at North America and you look at Canadians using Canadian dollars and you look at Americans using US dollars and the peso in Mexico, what's important, they don't care what the dollar is in terms of strength in relationship to another currency. That's meaningless. They care about how much it costs for a dozen eggs, a pound of flour. And the problem that it continues to really be tantamount, and it's the most worrisome item on the agenda for me, is that we talk about dollar strength, but what we should be talking about is dollar strength in terms of buying power. I'm putting up a stochastic oscillator. I just need to smooth it. And what you do, this is a stochastic oscillator, and to determine overbought, you want to see these two lines, the %D, %K, move above 80. And then what you look for is the cross, and that's when you would typically get your sell signal. You can see that here. You can also see when it moves sideways, it gives you that same noise. So with that in mind, We had a beautiful scenario back on November 14th where it dipped below 20, actually went as low as 2 and crossed. And that was when we got the signal for this buy signal here. So I've used stochastics for 45 years now. Right now, we are neither overbought nor oversold. Overbought is above 80. Oversold is below 20. And we're sitting at roughly at 50.
Wow.
So we're right in the middle. I can show you other indicators, but for the most part, Jeremy, really what I think technical traders, fundamental traders also are looking at is momentum. Because in the charts we'll look at in a minute, when we look at the year, I'll kind of give you a peek of what I'm looking at for next year, but mostly for December. Mm-hmm. The momentum has been strong. And incredibly, when you look at a monthly chart, it's just literally a vertical line that starts basically in February. But the rally started, I believe, in October of last year. When you realize that a $20 bill now maybe could get you a couple, 4 people a cup of coffee at Starbucks, whereas $20 100 years ago, you could buy a suit.
Absolutely.
Big difference. Yeah. What I'm saying is I'm looking at how this market moved so that we had really gains of about 600. We've got to take back at current pricing about 200. And we haven't finished the month. I would say, regardless of where we do conclude this C wave, even if it's down here, absolutely without any question, we will restart the clock. In other words, we will restart the clock by going wave 1, wave 2, wave 3, wave 4, wave 5. Each of those waves, 1, 3, and 5, go to higher pricing. Then you'll get your correction. All things being equal, we've got 1, 2, 3, 4, 5, and this is the highest price gold's ever been. We'll weather this correction. Once that concludes, the bull count restarts, and that's going to pick up $400 or $500. And how many of them do you get in a year? Typically, you get 2 full counts. And so I'm very bullish. I'm not going to give you my exact numbers yet. We'll save that for the outlook, but I'm exceedingly bullish for gold next year.